Simplicity is about subtracting the obvious and adding the meaningful. John Maeda. My friends, strive in all things to make your life simple. Same with your trading life. Keep it simple. When you find something that works, use it until it stops working. Always try to simplify. We have honed these charts down again and again and again to try to make things as simple as possible because simplicity works. Read about Occam's razor. I'm not going to get into, you know what? I'm going to put that at the end of today's video. I've got a teaching on Occam's razor. It's the simplicity principle by John of Occam, a Franciscan friar from medieval times, I think, but I'm going to download that here. The training today that's in your show notes, I really want you to have. Incoming tide floats all boats and stocks too. Great training. If you don't get those trainings every day, that's because you're not signed up for free at chartingwealth.com. Don't forget Patreon members. We have our live question and answer call-in session this Wednesday. I believe that is the 2nd of February. I believe that's right. And it will, as it always is, Eastern Standard Time here in the States at 12:30. Hope you can join us. If you can't, nonetheless, go ahead and send in your questions. Send in the stocks or ETFs you want us to help you backtrack so you can practice trade them effectively. And we will endeavor to answer all your questions, deal with all your stocks. Even if you can't join us, we'll send you a recorded video of the live question and answer call-in session. We appreciate our Patreon supporters. We appreciate you who just listen every day. If you care about what we do, would you subscribe? Would you hit that like button? It helps us to share our free message with everybody else and recommend us to other people. Share our videos. If you're listening to the podcast, give us a 5-star rating and share that. Help us in every way we can. We come to you and bring this free every day. So show us a little gratitude if you would be so kind. Let's talk about where we are. It was an update for everything but gold. Gold just a little lower, 0.30. We look at the rebound on SPY up 2.48%. NASDAQ 100 up 3.14%. Does that change the big red down candle for the week? And the price percent oscillator hammering down and the derivative oscillator on our big charts? No, it does not. In fact, it's even a steeper angle going down this week. It's nice to see the week end up a little bit on Friday. But again, lots and lots of downward pressure on stocks. As we look at the weekly chart on the S&P, we look at what's happening on the 2-day chart. First day of this latest 2-day candle that we'll finish drawing on Monday it was a green candle previously, the Wednesday, Thursday, a solid green, which is slow down in the down movement. That down movement is showing, as far as the Heikin Ashi candlesticks, the average pace still pushing down. Price percent oscillator has gone, has what will we call? It's softened, we'll call it that. Softened in its down move. Still heading down, not quite as hard. Not nearly as hard. Derivative oscillator also finally losing a little bit of downward momentum, but the pressure is still down on this marketplace. Price is right there at the 2-day trend line. So again, still lots of downward pressure. Let's look at the half day, and you can see what's really been going on throughout the course of the week. On Monday, big down move Monday morning, and then we've seen things pretty much just slide sideways the rest of the week. We did see at the end of the week a crossover going up on the half day, so we'll try to find some way to draw something there. If that's, it's almost flat, not much of a trend line, not much worth of anything. Oh, there we go. There's a little bit. So anyway, we did have things tick up at the end of the day. Price percent oscillator, derivative oscillator, heading up. So we at least see that on the half day, which overall doesn't necessarily mean a lot, although when moves do turn around, they always start on the smallest chart, but it's that smallest chart that has the least effect. It has to go on and go on and go on to then affect the big chart. So up for the day, but didn't change the overall sentiment of the market, which is down. We go to the Qs, same thing. Market moving on down, and it was down more today. I'm sorry. The candle for the week is down more. It was up more for the day than the S&P, 3.14% on the NASDAQ 100 versus 2.48% on the S&P. Price percent oscillator nonetheless heading down. Derivative oscillator heading down today. Again, pretty much the same as the S&P, flattening on the price percent oscillator. Derivative oscillator finally losing some downward momentum, but resumed with a red candle. We look at the half day, and again, you can see where things really pounded down Monday morning and pretty much doing not much more than sliding sideways throughout the course of the week. Did cross over at the end of the day on Friday, heading up on our shortest of charts, which means the least, but at least a little bit of good news as far as downward movement goes, slowing down on Friday. What's up with bonds? Up for the day just barely 0.03%. Had all this strong down movement after that weekly vertical crossover going down back early in the month on the 7th of January. Down the next week ending the 14th, down the next week ending the 21st of January. This week, slowing down in the down movement, green spinning top, almost a doji. Price percent oscillator still heading down. Derivative oscillator still gaining downward momentum, so still a lot of downward pressure on bonds. It has fallen out of the trend line on the weekly, so that's a good sign as far as some potential up movement goes. Look at the 2-day. What do we see though? Again, just a sideways slide going on for many, many days. Did have a hard push down on that Tuesday, Wednesday, 18th and 19th of January, but then it sort of recovered and is just slipping sideways. Price percent oscillator though is heading up again. It started heading up after the up movement on the Thursday, Friday candles, the 20th and 21st, and then started moving back over as the market started deteriorating a little more. Now is heading up a little bit. The derivative oscillator has gone positive, so you know that's okay. And then what do we see after 2.5 days of strong down movement? A day of up movement on Thursday, down some in the morning, and then recovering a little bit in the afternoon. So again, we'll continue to keep an eye on bonds, but like stocks, there's still lots of downward pressure there. And I'll try to redraw some type of trend line on that half day. But again, overall weight of the market, stocks and bonds, lots of downward pressure. Now, let's go back to the weekly. What's up with gold? Down a little bit for the day. And again, we look at the weekly chart, and we have ended this week with a red doji. Lots and lots of indecision. We've seen a doji before. That was back on Friday the 7th, that ending week, and almost another one on the 14th. Now, last week we had a nice up week for gold, tweaking out a high of 172.60. This week we had a high of 173.15, and things sort of petered out. Price percent oscillator is positive, but heading down. Derivative oscillator just hanging on to some green. We go to the 2-day, and of course, first day of this latest 2-day candle is crossing over, going down. Now, it's not finished drawing yet, so we don't have a crossover. That would take us out of an up trade in gold if any of you were still in that. Derivative oscillators gaining downward momentum. We'll see what happens on Monday, but downward pressure on that 2-day chart, and the weekly is getting weaker. So we'll see how gold continues to move. What about the half day? 1, 2.5 days of strong red down candles, recovering a little bit in the afternoon on Friday, just being down 0.30%. So gold's struggling to keep that weekly vertical crossover. That is where we are on gold. Lastly, we'll go to Bitcoin, up some for the day, still nonetheless a down week. Lots of downward pressure on Bitcoin, price percent oscillator heading down, derivative oscillator flat. Big red down candle for the week in Bitcoin. We look at the 2-day, and again, a red down candle forming after a solid green slowdown candle because we had that big dip in Bitcoin on the Monday, Tuesday candle. So we'll keep an eye on this Friday. Derivative oscillator losing a little bit of downward momentum. Price percent oscillator slacking off a little bit on that downward move, but still heading down. We look at the half day, we can see where Bitcoin really punched down with stocks on Monday and trying to recover a little bit throughout the course of the week. Did cross over like stocks did, heading up on this half-day chart on Friday afternoon. So again, still lots of downward pressure in Bitcoin, downward pressure in stocks, lots of downward pressure in bonds. Gold is even struggling, to keep things up as far as the weekly and the 2-day chart goes. So markets are struggling, even with the update for stocks and bonds and Bitcoin on Friday. That is where we are, my friends. Hope that our Patreon supporters were able to go out there and find a couple of good moves with your weekly vertical crossovers you received last night. If you're a Patreon member, remember you get 20 of those each and every week, and they're some of your best opportunities to practice trade. That's where we are as the markets end. We appreciate you joining us for our weekly review and forecast, which we bring to you for free every single Friday. So get busy, study hard to show yourself approved. Spend the time, 10 to 15 minutes each and every day, to learn the nuances of what we do. And God bless you all, my friends, from the whole team at Charting Wealth, World Headquarters.